Yeah.
That okay. Record. Hey, good morning, Nikia. Okay, perfect. We are good to go. So good morning, good morning. Happy Mother's Day to all the moms in here. Happy Mother's Day to your mom. Um, Hope you guys all had a great weekend. I did. It was actually very relaxing. So the first thing we're going to kind of talk about here is we're going to go over the updated Hometown Heroes guidelines, which is most likely going to be switched over to the probably going to be a different name, but it's the updated version of Hometown Heroes. Okay, there's been a lot of talk about it. We knew that this law was passed back with GUARD, which was back in February, March, but there really hasn't been any specifics, which is why I haven't really said much to it. I was able to get feedback directly from the Florida Housing Finance Corporation last week. So I was like, perfect, time for me to actually bring it up, because I know, coming from the actual horse's mouth what it's going to look like. And it is pretty much exactly what is being advertised. Okay, so it's going to be still 5% up to 5% down payment assistance up to 35,000. So it doesn't mean that that person automatically is going to get $35,000, guys. It's up to 35. So that really they're only going to touch that if they're at $700,000, right? Because that's what 5% looks like from there. But if they're below that, if they're at 400,000, they'll still be getting that $20,000, whatever 5% of the actual loan amount is. They are removing the occupation list, and the person just has to be a first-time home buyer and be an employee directly in Florida. So essentially, pretty much almost anybody that's a first-time home buyer is going to be able to get into this program. They're coming up with the updated income limits, which should be out sometime this month. They update it every single May. So I'm assuming if not this week, for sure by next week, we'll have the updated income limits, and we'll go over those as well once they come out. But pretty much just being below the income limit, 640 FICO, and being a first-time home buyer. That's pretty much it. And we know that the income limits for Hometown Heroes are very, very steep, meaning that a lot of people are able to enter. For last year, it was 146 in Broward, $146,000 in Broward, and $136,000, or sorry, $146,000 in Miami-Dade, $136,000 in Broward. And we're assuming that that's going to increase because every single year that area median income does increase as well, right? So it's probably going to be higher. We don't know the actual numbers until they come out. So that's good news when it comes to Hometown Heroes. The reservations start in July. Okay, so what I'm telling people, a couple things. Technically speaking, okay, you guys can go under contract right before July and still reserve the funds July 1st. So the last week of June, more or less, you want to start getting people pre-approved already, and start looking, and then that way you can kind of time it. Because what's going to happen is they're going to get a lot of reservations up front. And those funds, they're predicting for them to be about 6 to 8 months for them to run out. I'm thinking probably about 6 months. I wouldn't be surprised if by the end of the year, the funds are pretty much depleted. We thought the same thing when it first came out with the occupation list attached to it. Now with that being removed, it's pretty much all hands on deck, right? Everybody's going to be able to get some sort of down payment assistance, which is good news. And to be honest, I'm kind of concerned about it, only because what's going to happen is, or what I feel like is going to happen is going to be a second version of the PPP loan that came out back in 2020. There's very minimal inventory. And so the people that have the money, they're still going to want down payment assistance, and they're still going to get it. And what's going to happen is that extra money that they do get, right? Because that down payment assistance is covering, let's say FHA 3.5%, conventional 3%, right? It's covering that plus closing costs. And so now with minimum or minimal inventory, you're going to have multiple people bidding, and they're pretty much probably going to have Hometown Heroes, right? At least a few of them. And if they've got an extra $10,000, $15,000 saved up, and they don't necessarily need it, right? What they're going to do is they'll basically say, okay, we're going to do $5,000, $10,000, $15,000 over appraised value. We're going to probably see that happen again this summer. So just be prepared for the hecticness, and be vigilant. And I know that at the end of the day, we're in here for transactions, but let's not put our borrowers in a bad position with waiving appraisal contingencies and stuff like that, just because they're getting 5% down payment assistance. All right. I think that's going to be the biggest thing. I think that we're going to see overappraised value come back, and that's okay. That helps out, honestly, helps out other people that are already in their homes, kind of get that appreciation going, and may in the future, if they see that they have a lot of equity, those people with 3% interest rates, if rates come down to the fives, they may now consider, okay, you know what, it's not a big, too much of a big difference in payment. I've got a lot of money in my house. Let me sell it, get all that equity, and now all those accidental landlords start selling their homes, and maybe we get an increased inventory in the future and stuff like that. So a lot of things that can happen, but just be wary. Just know that it's going to be a very hot summer because there's going to be a lot of people that are able to get these funds. Okay. Another thing that I kind of wanted to bring up as well is inflation. So consumer price index came out for the month of April, came in at 0.4% month over month, and we're now at 4.9% year over year. Now remember, the Fed's target mark is 2%, but this is not what the Fed really looks at. They look at PCE, personal consumption expenditure, and that's probably going to be in the mid fours as well. We get that report, if not this week, I think next week. But either way, we're really good deflationary pressures from where we came from back in last year, June, which in June last year, I think we were like at 9.1% CPI. So we're seeing inflation continue to come down. This is another thing. Come on. For the clients that are on the fence right now, or the clients that may be waiting for Hometown Heroes, is rates are showing you little by little that rates are slowly going to be coming down, right? Right now, they've been trading a little bit sideways because of the volatility, but we're seeing it kind of unfold. Rates are pretty much positioned to come down at the end of this year. Okay. So another good thing that's going to come for our market, 2024 is probably going to be a much better year than 2023. 2023 is on the purchase aspect of it, but we're seeing inflation come down. We're seeing rates react well to them, and so those clients that are on the fence right now that are kind of waiting, let them know, it's time to start looking, get pre-approved. If you have things that you need to work on, now's the time. Because if you wait for rates to come down into the fives and you still got to wait another 2-3 months to fix your credit, to do these other things, by the time you're in the market, there really isn't much that you're gonna be able to get to look at. Although rates come down, why does it cost so much? What do you mean, Alicia? Good morning. Happy Mother's Day.
Great morning, not to you, happy Mother's Day to your wife. I see sometimes the rates go down but it costs. Like, it's costing so much. You can get right now like a 6 point something, and it might cost you about $3,000 to $5,000. That's what I'm talking about.
Yeah, so you're talking about buying, paying points and buying down the rate and stuff like that. I mean, it's costing like that. It's costing so much right now specifically because there is no liquidity within the bond market, realistically, right? So because there's really nobody buying mortgage-backed securities, there's no liquidity, there's no money coming into mortgage bonds. What happens is that you're going to see less premium on interest rates, and so everybody kind of knows what's going to happen within the next 6 months, right? Which is rates are going to come down. So think about it, you as an investor, understanding that you're going to get a 7% interest rate, right? You're going to buy a mortgage, and you're going to get a 7% return on that. That's fantastic. But as soon as rates dip down into the fives, that mortgage that you bought is now going to get refinanced, right? In a year or 2 years. So you may have paid an extra 2 or 3% on the back end. So if you got a $300,000 loan, let's say you paid $315,000 for it, right? You paid a little bit more because the lender did all the job up front, and what you're banking on is to make the residual income, right? That 7% over and over and over again. Well, it may take you 4 years to make up that money, let's just say. Well, we know that if rates come down in 6 to 12 months, that loan that was done is going to refinance. So you may not recuperate your money as the investor on the back end, right? And so what happens is, in order for somebody to buy a mortgage right now from another lender, they need some sort of discount on top of it or some extra premium, because they know that they're not going to make the money back if they just go based off of specifically getting that residual income from the interest rate, because that is going to refinance in a year or two. Standard servicing, typically standard mortgage rates in a regular environment, they typically, a standard loan may last 6 to 7 years. Right now, the estimated time frame is about 3 to 5. So because of that, people are refinancing much, much quicker, which is why people are paying points, because it's the servicer on the back end or the investor on the back end that wants that premium just in case that loan refinances early.
Right. I don't know if you asked this question, or it was it said. As a real estate professional, and we work closely, I work closely with all my lenders, and a lot of times once we get all the documents in and it's in underwriting, one of the questions that when should you lock the loan? Because I seen just last week, I want to say the 6.7 something was costing almost $3,000, but then the absolutely next day it went to almost $8,000 to get that. So when do you typically lock a loan for a client? Because I know you watch rates every day.
I lock it. So me personally, right now, I'm locking it in as soon as I get the contract. I typically don't wait because of the volatility in the market, and also because I send closing cost worksheets out to the realtors and to the clients as well. And if they go under contract on that specific property, and we just sent the closing cost worksheet a day or two ago, it's very difficult for me to say, hey, the rate just changed now, right? That's hard. I mean, sometimes it happens, very, very case by case basis. But if I send you something and you like the numbers, why am I not going to already lock you in at that? It's not. It doesn't benefit me to float in this market. In 2020, 2021, I was floating pretty much all the time.
Well, what happens if the rates go down? I mean, the costs go down 2 days later. It's like, oh, I'm stuck.
Yeah, but it doesn't. The rate right now, rates are not really coming down at a point where it really financially makes sense to take that risk. Right? It doesn't. If rates come down, if you end up saving an extra $1,000, is it worth it? You losing $3,000? Probably not. Right? So it really just depends. If rates really come down that much in a time frame of 30 days with that client's under contract, realistically speaking, between you and I, we do have the float down option here that we can consider for borrowers. But that's very, very rare that happens, especially in this market. There's just too much volatility. We had, perfect example, on Tuesday, we had inflation come out, or was it Tuesday or Wednesday? We had the inflation reports come out, rates dipped. They dipped down. On Friday, rates went right back up to where they were in the beginning of the year, or beginning of the week, I'm sorry. So it's a kind of give or take. If we would have locked rates on a Tuesday or Wednesday when the inflation report came out, and then Thursday rates were a little bit better, Friday rates were much, much worse, right? So it really just depends. In this market, I don't take a risk because I've gotten bit on it. And kind of what I do as well is right now I'm doing a lot of down payment assistance, because it's the down payment assistance programs that we are utilizing with Hometown Heroes and Florida Bond protects the buyer from paying any extra points or any extra risk, right? So if the rate is for Florida Bond today at 6.25, and we lock in at 6.25, we know that client's not paying any points for that, as opposed to me doing a standard FHA and saying your rate's at 6.25, but you're paying 1.5%, 2%. It's better for me to go to that down payment assistance route as well, so that way those points are not being paid, even if they don't need those funds. Just like I was talking about with Hometown Heroes 5%. The borrowers may not need them, but it protects them against the market, right? Standard lenders are not going to have the great rates that down payment assistance is going to have. And so right now I'm locking in everything. I just can't take that risk, because I already promised those numbers up front. So to change them for somebody is not going to be beneficial.
Makes a lot of sense.
What happened?
I said makes sense.
Yeah. I can't. Like that other person that they're charging a little bit more, you might want to talk to the lender, see if they could get some sort of discount for them, or see if they can put them into down payment assistance. Maybe try to go that route and protect them with the market. So CPI, we're talking about, it kind of came down to 4.9%. Now, CPI, remember, is consumer price index and measures inflation on the consumer level and the changes of prices between products on the consumer level. The PPI also came out, which is the producer price index, which measures inflation on the wholesale level. And that actually was at, I think, 0.2% month over month. And we're down to, I believe, like 2.3, 2.4%. I forgot to write it down year over year. But it's good news because what happens at the wholesale level happens at the consumer level, right? Kind of trickles down. If at the wholesale level, inflation continues to rise or the cost of products is much more expensive on the wholesale level, you're going to see that trickle down to the consumer level as well. So as it gets much cheaper for on the wholesale level, it'll become much cheaper on the consumer level as well. So pretty much right now, all signs are kind of pointing to rates continuing to dip down. Remember, I told you guys, I've been saying this since literally this time last year, mid to late 2023 is what we're looking at. And we're pretty much right on target right now. We haven't skipped a beat. We're most likely probably by July. I think July is going to be the hometown heroes, the lower interest rates. July, August is really where we're going to see things kind of come into play. And we should end the year around the mid fives or in somewhere in the fives consistently with a little bit less volatility. The last thing that I kind of want to bring up to you guys today as well, before I open it up for questions, and I'm actually glad Sonia and Lorraine are here. So we have, you guys know I'm part of the board for NAREB. Okay, we have an event coming on Thursday, Understanding Probate. Okay, for those of you guys that want to know more or be able to efficiently list properties and become an actual listing agent, this is something else you're going to be able to utilize under your tool belt, is understanding how probate works. It is much more complicated than just getting that listing agreement and going ahead and putting that property up for sale. There's a lot of things that kind of come into it. If there's multiple people on the title, it's getting, it's going through that probate process to see finally if the one person that passed away who inherits on their side, do the other people on the title as well agree with the sale of the property and things like that. A lot more that kind of goes into it. We have that event on Thursday at 12 p.m. I'm actually going to put the link in here so that way, if you guys are able to come, we are serving lunch and you guys will be able to kind of understand more about probate as well as earn 2 continuing education credits, which I believe you guys need it every single year or every single 2 years. I forgot. I haven't been a realtor in a long time. But you're going to be able to get 2 continuing education credits, and it's going to be probate lunch and learn directly with a probate attorney. Okay, so you're getting it straight from the horse's mouth. That way, you guys can go and learn a little bit, eat lunch, get your continuing education credits, and utilize that for your tool belt. When I was an agent, I did a lot of pre-foreclosures, and I didn't go to a event to learn it. I did everything on YouTube and I read about it in books and stuff like that. It's kind of a shortcut, right? 2 hours out of your day understanding probate, so that now when you want to try to get probate listings, or that's specifically what you want to attack. Oh, sorry, Wednesday, May 17th. Yeah, I said 2 days and I said Thursday. I don't know why I think today's already Tuesday. It's Wednesday, May 17th, 2 days. Okay. You guys want to know how to specifically target and get probate. There's a lot of things that you can look at that's public record that you don't have to spend a lot of money on. So hope to see you guys there. Do you guys have any questions in regards to the new Hometown Heroes, in regards to inflation rates this year, anything like that? Or anything that kind of came up for you guys in the last week? Any scenarios that you guys had that you kind of want to go over, or let the other agents in here know?
I do have a question, Mike. This is Carla.
Hey, Dr. Carla, how you doing?
Hi. So the bill that was passed last week about the foreign nationals and owning property and stuff, does that in any way affect your industry? Or do most of them just pay cash?
No, I mean, for me specifically, I don't do a lot of foreign national business, but yeah, if they're, from my understanding, I haven't read the bill yet. But from my understanding is they're limiting the amount of foreign buyers that are able to come, right, to the state of Florida. And so it's definitely going to affect a lot of business. I think in the Miami area, a lot of those people there are foreign buyers. So downtown, like Brickell, Miami Beach, those condotels type places, that's really where the business is going to affect. For me specifically, it's not going to have a big bearing on my business, but what I'm going to do is I'll look into it, into the bill, and read it, kind of like I read the whole Live Local Act over the weekend, to go through the whole thing just to make sure I'm not missing anything. that would really be important. But I'll do the same thing for this one, and we'll kind of talk about it next week in depth and see if there's anything there that stands out to me. But my understanding is that they're just basically minimizing for national buyers, and that is going to affect the South Florida market for sure.
All right, thank you.
No problem.
Hi, Mike.
Hey, Crystal, how you doing?
Good, good. You may have covered this. I had to step away for a second, but regarding the Hometown Heroes, is there a minimum credit score for those applicants?
Yes, minimum FICO 640.
Okay.
Yeah, 640 minimum. It's going to be the same thing as the regular Hometown Heroes, just without the occupation list. So they still got to be full time, which most people, I mean, if you're buying a property, you are most likely full time either way. And minimum 640 FICO, and then below the income limit for Broward and Miami-Dade, which those will be coming out not this week, next week. Yes, Karen, from 12 to 2.
Mike, do you think, excuse me, do you think that there is anything that on our end we should potentially start doing now? I know it's kind of early. Well, it's not really early. May will be done. We'll blink and we'll be like, oh my gosh, it's already June. I know this is rolling out July 1st. Do you think that there's anything that we should be doing for or with our buyers now so that when July 1st comes, they're actually like ready to go apply? Because I perceive that that money is going to, it's going to be like hot pancakes. Everybody's going to be diving into it because of the restrictions that have been removed off of the initial Hometown Hero program.
Yeah, and I told and I'll say it here as well. I told only one of my realtors over the weekend, but I'll say it here. You guys should already start telling people to get pre-approved now and already start looking. If you go under contract by mid-June, technically we're 30 days, right? Standard contract's 30 days. So if you go under contract June 15th, June 16th, that's not going to close till July 15th, July 16th. And we're going to have the updated income limits this week or next week. So we're going to know everything of kind of what it looks like. I have an email directly from Florida Housing that says exactly what the criteria is. So I'm not too worried about those funds coming up and then something happened and we didn't calculate the income correctly or anything like that, because directly from Charles White at Florida Housing, he basically says everything's pretty much staying the same. We're just removing the occupation list. And then the new income limits will be out in the next couple of weeks. So because of that, yes, I would say already start getting people pre-approved, because if they need things to work on, they can work on it. And then that way we can already get them positioned to go under contract mid to late June, and then start reserving those funds July 1st.
Sounds like a plan.
Perfect.
Are they allowing more money for this than they did for the original iteration?
No, it's 100 million. So now they're refreshing, and it's only 100 million specifically for the new updated one. So the current one, I believe, still has about 10 or 11 million, if I'm not mistaken. Let me see here. They've got $17 million left. So that's still going to be specific to the current Hometown Heroes. That money's still required for that. It's going to be $100 million set aside for the new updated one that's open up to everybody. And they also are, by the way, I think it's about $150 million for developers to build affordable housing. I think I mentioned to you guys this a couple of weeks ago within the down payment assistance training that I had, that you guys can go to Miami-Dade specifically through the PHCD, and they offer loans for small businesses. You could do the same thing. The Florida Housing is coming out with the same thing. So if you guys are looking to, as realtors, get into developing affordable housing within your neighborhoods and stuff like that, you'll be able to utilize that and do that through a lot of local fundings. To be honest, there's a lot of different programs that you can get locally, but specifically Florida Housing is also coming out with something to give low interest payment mortgage loans for developers. Okay, you guys good? Any other questions? No? All right, well, if you guys need me, you guys know my information. You guys have my cell, give me a call. Have a great week, and we will be back next Monday, hopefully with the updated income limits.
Thank
Thanks,
you.
Mike.